Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your afternoon update, your financial one, for Wednesday. And this is the 26th of April, 2017. And the time right now, well, we're in the afternoon, just after 4 p.m. So as you look at the markets, a bit of a correction. And the correction happened, as I wrote about in my updates, when it's buy the rumor, sell the fact. Now, whether this has any legs to the correction, don't know. But the markets all got what they wanted. What do I mean by that? The markets had rallied up for 2 days strong, hoping to see the president's tax plan that was unveiled, and that is important. So he's put out his points, and I'm going to write about them tonight. I'm not going to rattle them off here, but suffice to say everything that he was saying. He's going to offer a special tax breaks for corporations that want to repatriate money in America. He's doing away with a lot of the taxes on individuals, the alternative minimum tax he'd like to get rid of, changing the tax brackets, the maximum rate there, corporations, the same type of thing, trying to create jobs and reasons for people and corporations to invest in America. That's behind what he's doing. We'll see how well it's received over the next weeks as we hear more from Congress. I also just read as I was coming into the studio that the Freedom Caucus group is now seeming to get behind the president's ideas on health care. That's a little bit of a change, but if they did that, what happens to the moderates? So we've got to see how that's going to play out. Energy prices, a mixed day today. Another build in Rebob. So I'd be careful there. And you were a lot lower than this going into the close in the crude. It was in the 49.40s, if I'm correct. And that's because, again, we've had that build. Natural gas, they're looking for a build tomorrow, a sizable one, I understand, over 70 billion cubic feet. The norm is about 56 to 65 at this time of the year, so a little bigger than normal. I'd be looking at that. Dollar had a little bit of a rebound against some of the currencies, and the yen still getting hit pretty good. It's about 30 points off the lows, but got hit hard. Let's take a look, if we could, at the charts and what's going on. We're knocking on the door of getting to all-time highs. We got up today as 2394.75. You can see that, but fell back by the close to 2382.20. Now, when we take a look at closes on the chart, you can see how you've been doing, and you're off that high close just a little bit on a daily basis. Here's something to keep your eye on. This is a gap. One of two things happen on a gap. Either the market immediately comes back and tries to fill it, and when I use the word immediate, it doesn't have to be in the next day or two, but gaps don't get left on charts. If they do, they accomplish that by not breaking under this number often, and sometimes even getting what's called a breakaway gap to the upside. Right now, we're waiting to see, does it want to come back and immediately fill the gap? As you can see, when you go back on the charts, you don't see gaps like that. So the question is that going to be a magnet to pull prices down or not? When we look at the swing line study, you can see that you have a clear pattern of higher lows and higher highs. That's bullish. What would break that pattern, right now at least, is taking out 2340.50. The 18-day average of closes comes in for support in the 2352 area, which would fill the gap that we had in the chart. So that's another reason to look for that to be something of a support zone. The market tried to come back under the upper Bollinger Band. Now, it did manage to close over it. So now we have today, yesterday, the day before that, though, the market closed under it. So we have 2 days in a row over the upper Bollinger Band. Most I generally see is 5. You get patterns like this. And then the stronger that they stay, in other words, you get 3-4 days, the breaks are shallower. 2 days doesn't tell me that much about it if the market decides to pull back. And as usual, that's often accompanied by an overbought signal. You can see that here, how that worked. This one turned into an embedded signal, and that was a very powerful reaction. Most times the market gets up to an area that's overbought and it corrects by breaking back. In the Dow, overbought, 2 days in a row over the upper Bollinger Band as well. Support back, 20,591. I have allergies, so excuse me, I'm trying not to sneeze there. In the NASDAQ, the market is up and over the upper Bollinger Band here, and as you can see, we're into the overbought territory. And again, you're getting a series of closes over the upper Bollinger Band. Same thing that's happening here in the Russell. Now in the Russell, what about this day right here? Did it close over it? 1396 versus 9430. So you have 3 days in a row in the Russell where the market is over the upper Bollinger Band. The odds favor it will not make it to 5. We'll see if it does, but pullbacks probably not as deep as many people would think. Then we get to the VIX, which traveled from the upper Bollinger Band to the lower, and today it's not telling you much of anything. It closed very close to unchanged on the day. Oversold, 2 layers of resistance, back up at 1215 and 1338 in this market. So there's still a risk factor here to deal with if the market starts up again. We'll have to wait and see. But you've gone from a situation where you got up to 1600 all the way down here. That's bullish for the stock market, not bearish. Then we get to the bond market, which, as I mentioned yesterday, the first slide under the 18-day average. Well, today you come back, you're fighting right at it again. No surprises there. And I looked, by the way, to see what the odds are of the Fed raising interest rates in June, and it's about 70% on the CME Group webpage. June 10-year notes fighting right now, again, at the 18-day average of closes. Now, should this market get over this level here, the 125, 22 and a half zone, I would consider that a sign that the market doesn't want to continue to the downside, wants to come up, back up a little bit. Right now, it's in no man's land, but I think that because the swing line's down and the market closed over the 18-day average and you've worked off an overbought condition, there's nothing to tell you what to do. In the dollar index, you got to the right-hand side of the Bollinger Band. You had 2 days under it, so a bounce is more than in order. That's what I've been talking about in the stock indices. But it doesn't change very much. I mean, the pressure's still on the market. There's certainly nothing bullish about it. The bias is down, but you are oversold, and that sometimes begs a correction. And if we take a look at what happened today, in the euro, you closed 109.25 and a half, which is just under the upper Bollinger Band. So the market did just enough to get to the right-hand side of it, and that keeps this market still very strong, overbought, but still in a strong posture. Will you get traders against that upper Bollinger Band? It's always a hard thing for followers of that to do. Then we get to the British pound, which remains overbought, moving sideways in this tight range that I've been telling you about, and you went back up and challenged this high area here. Not quite the one that we have right where my finger's pointing, but it's still acting good. Anyone thinking this British pound's acting weak, they got another thing coming. Brexit doesn't look like a bad deal so far for the Brits, at least in a currency. In the Japanese yen, the market continues to take off the risk premium. In other words, when people were nervous about the market, they buy the yen. They're scared, things are going wrong in the world, blah, blah, blah. Then when the markets get better, the market starts dropping back, and that's what you're doing. The question is, will 89.44 support that market? As for WTI crude oil, oversold, challenged yesterday the lower Bollinger Band, got a bit of a bounce today. Has the market overdone this break in one swoop is the big question. It is a $6 break, and you can see there's no bounce out of it so far. In the unleaded gas, you know, if you were to say that spring's here, it's beautiful, people are driving, and you get through this low, that is impressive. The reason is that we saw another build on the EIA of about 3.6, and that's big. It's probably imports more than it is our own producers, and those imports are just building the stocks of gasoline. When we look at nat gas, back to a neutral area, not a surprise. You got to the lower Bollinger Band, oversold, a bounce, and now you're here. There's a bit of cold weather coming into the Northeast. Markets think that maybe what will happen is there'll be some unusual demand while that's here. We'll see if that is in fact the case. It's certainly not yet the warm season. Let's talk about something that you don't have unless you've called us or gone on to our website. This is a chart of what we call a price count. Now think of a price count as a swing line like you see me talking about, but with a certain chart formation, more than just a swing line. You can have an up move, all of a sudden you get that correction and it breaks down where the price count's going, to the downside or the upside. What a price count does is it's not an entry point. It's where a market might go point, and the nice part is the first count, when it's activated, it's a high probability count of hitting. The second, not as great, but good. Third, a little less. Fourth and fifth, very low, but you can get them in what we call a runaway market. It's that first to the third that we teach you to look for. You get all the paperwork and you get the chart of the day by giving us a call. You can go to our website, sign up for it on our carousel of free offers. Right underneath us on many websites, you'll see, click here for Ira's free market information. Click that, or click right up here, the icon on, if you're watching me on a YouTube video, the form will pop out. Choose this or any of the other free offers. We'll do our best to get them to you. I'm Ira. You have a great trading day.